Hello, 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 everyone. Good afternoon. How's everyone doing? Mike Arnold here, co-founder of Pat Trading Partners, along with Bob Iacchino. Yes, George. Hello, TGIF. Glad it is over. Now we can prep for next week and the Fed rate hike. Hello, Amit. How are you today? Going to be a lighter crowd today. I'm about 27 minutes late. I was at an off-site meeting. Just wanted to do, this is not going to be a long session. Just wanted to do a quick recap. Just looking at some stuff. By the way, we had that little spike this morning. The big thing was options expiration, nearly that 3,900 pin, but that 3,900 was the magnet price. That's why we kept watching it. Puts closing slightly in the money, but you want to know something? It's so interesting because we'll probably now get a gap up Sunday night based off this price action. Inflation expectations, I know that was being celebrated this morning, coming in slightly. The consumer expectations and inflation coming down a little. It's just ridiculous. Everybody's trying to just find that any excuse to still buy this. And by the way, stairs up, elevator down. Well, we've had some elevator stairs down too. You were getting worried about what, Amit? Good evening, Anissa. What happened? I would be late. I said I had an off-site meeting. If you watched the replays or tuned in, I said it a couple times. So nobody should be surprised. Hello, Patrick. Well, Tesla, I'm not even going to comment on Tesla. Tesla's an outlier because of what's been going on with the option stuff. Hey, Nas. So that's really it. Again, we're going to get pretty mixed. Mega caps, Amazon's still down, Apple's still down, Meta down. Healthcare was okay. Oil's down a bit. Other than that, you get stuff like your semis, a little rotation, brief rotation into semis. Wouldn't get married to that move. Still, you got an 82% for that 75 basis point. That's going to close back to 90% going into Wednesday, my thinking. We don't need to look at that because that's over. We'll take a look at stuff closer this weekend. So, where are we sitting here? I mean, we got 1 minute to trade. Look at this. 1 minute to trade. I mean, when I was talking about the 3900s, we were right below there when the cash closed and everything else. But look at this. Look at this pin. 4 p.m. when the futures close it down in 1 minute, we're trading 3,900. There you go. You want to talk about a pin day? Right there. Right there. What was the low today, by the way? 38.53. The harmonic, I'm sorry, was 38.52.25. But there's essentially your pin going in. And maybe, where are we sitting? 39.02. So anywhere in here, that's pretty much a wash on everything. By the way, I'm starting to watch for a bounce going in Sunday, Monday, Tuesday, possibly. Daily cycles now to the low. Also, very significant divergence. So lower low in price action. Let me take the little levels off. Lower low in price action. Higher low RSI. Cycles at the bottom on the daily. Cycles at the bottom for the weekly. We could be due for a pop. And especially now we actually have a buy trigger. Really nice. Also a buy trigger on a close above today's high for Monday, but that could be traded on a break above today's high. So don't get caught off guard going into the beginning of next week. We could easily see a bounce. And you could even see a bounce back to the theoretical top of the daily rotation zone, at least to this, back to the top of the declining rotation zone, the top right there. Hello, Amadeus. And then if we drill down, yes, there is that double on the 1 hour. You can only see it on the 1 hour. So that could be for follow through into Sunday night. But there are the targets. 39.11, 39.20, 39.30, and it is triggered. And remember, you still have a gap up here on the S&P from last night with the FedEx report. So we could easily see some continued upside bias. Easily see some upside bias, and even beyond that to take us back to that breakdown zone in the 4-hour rotation zone is coming in at 39.41. So I would not be surprised to see some follow through upside with OPEX out of the way. Not necessarily. Not necessarily. There was a lot of moves today based off of, now, if you're judging it on more than today, yes, things that held up. But I would not judge a continued rally just on today because of the huge OPEX. And even there was a lot of individual stock option expiration. So I would not just judge it. Don't go into next week thinking we're going to bounce. I'm just going to buy what was strong today. That is not a good strategy. Now, overall, it's why we go over to sector analysis. And also, if you're looking at some of the, even in the weak sectors, the strongest of the weak sectors, yes. I think it could, Connor. I think it could retest. And I would not be surprised. For the rally, I'll call it the rally before the Fed day. So we just have, we got to trade the price action. So that's at the end of the way. By the way, this was also, besides that 1 hour double, this was a 4-hour aggressive entry also for a bounce play. So on the S&P, we got that. Again, not going to be a long session today. On the NASDAQ, you got your double. Also, oops. 11, 9, 83, 12, 17, 12, 51. You look here. Let's go to 4-hour. You got the 4-hour buy on the NASDAQ also, and this takes us just in front of the breakdown zone. So we got upside targets with cycles rolling up on your 4-hour. Cycles looking to bottom on the daily. Your close. Now you got to somewhat take this also with a grain of salt because you had the pin prices. The pin for OPEX. However, traditionally, a candle that closes like this on the S&P, on the NASDAQ, right literally at the highs, is at least a short-term pop bullish indicator. All right, Dow, pretty much the same formation. We got everything trading in lockstep. Dow triggered to double 31,050, 31,175, 31,188 are the targets. You see here that takes it to just above the breakdown zone and to the other side of the 4-hour, or the top of the declining 4-hour rotation zone. And Monday would also be on a close above today's high, would be an aggressive buy pattern. I would just be looking to trade it on a break. Russell. Actually, Russell turning in, which was the stronger. And by the way, this is not a double. No double in the Russell. All right. But the Russell finally hit that 87.5 today. So finally dealing with that little down move. Interesting enough, is this a double on the Russell on a bigger play? I doubt will trigger. No, it's not. It is not. So we do not have that. So it doesn't matter if it triggers or not because it's not valid. DAX finally also hit the 87.5. So we'll take a look at that on Sunday. There is still an aggressive buy on bonds. Now, this is not a strong bottoming pattern just yet. On the notes. You just have a recovery rally, but there is a potential still on a daily close Monday above Thursday's high with cycles rolling down. Dollar index pausing. We still have the potential double top in play. That's the only thing I'm watching for a bearish move. And not really surprised as this back and forth price action still with OPEX ruling the day. Where do we sit? Might give this sideways move. When do you think we'll retest or break the June? I hate the timing questions. I'm looking in September, October timeframe. If we don't break them before mid October, if we don't break June lows before mid October, it could get interesting end of the year. Crude, not much, although there is an aggressive buy signal on again above now Monday or today's high for Monday. That's the only thing short term there. I'm not going to go through some of these right now. Bitcoin, actually, this was a pretty weak bounce back today considering what the NASDAQ did. Tesla, the double's not invalidated yet, but if we rotate up a little stronger on Monday, it will be. So that no other big plays on that besides if we do rally back up or retest the 308 area. So you had your semis, a little snapback. This I was going to see if it was going to trigger the buy pattern in NVIDIA, but no, it did not trigger a follow through buy pattern. This I'm more putting to the op. There's still some decent OPEX stuff in semis with the play, so we'll see if we'll get any follow through on that. Why? Because I said it could. My targets aren't there yet. I've gone through my targets already because from a earnings standpoint, from a fundamental standpoint, we should break down lower. We could retest it, although those are not my primary targets. My first target area is about this 35.50 on a break below June lows to 3,600. Then 31.60 right in this area. The key level you should watch. We could retest. I think if we go into a significant recession, we should retest these lows. The key level to watch for is this 31.61 level. You get a close below that, retest of the lows. Also, you have an average bear market is down roughly 37%, which should take it to 29.83 from the highs. That's not if you go into a major recession bear market. Okay? A more recession-driven bear market should take it down closer to that 45%, which definitely takes it on a closing basis below 31.60. And if you get down here closer to 45%, you're down in the COVID low area. And I think we're going to have a more substantial recession. Are we there yet? No. Remember, unless everything breaks, meaning we have a lot of key research, a lot of key indicators, a lot of key stuff breaking, then, yeah, anything could happen. But it would be very strange why is all this off? Oh, that was on the Head and Shoulders. Everything would be strange. Remember, as the yield curve, which is back down to forming another more substantial after this rollover play, a more substantial double, you don't get the major down moves in the market till this thing starts getting above zero and especially closes in on 1%. Are we anywhere close to that? No. That's when we start getting the major market down moves generally, based off of yield curve research. Okay? We're nowhere near this yield curve. We got the pop. We had that little double fan out, the Head and shoulders is now over. That inverse head and shoulders, we're forming a potential bigger double. But this is major pressure still downward on the yield curve. That's why I'm expecting longer term a more substantial down market. Okay. I'm not talking by the and I'm not even talking by the National Board of I'm talking by all standard metrics that are, when you get consumer credit defaults going up, when you get multiple contractions in GDP, we've already hit a percent increase on continuing jobless claims. How can we have March and June rise at 5 ignoring overbought but on the way down? Because that's what happens in bear markets, especially ones that everybody's still looking to buy the dip. Remember, go back and study the NASDAQ from the .com. Look how many strong rallies you had. And I traded through that, and you had everybody until they finally threw up their hands trying to buy the dip. Every decline was, let's buy the dip. And it cost some people their whole accounts. Because then they lever up more on the next dip, trying to get it all back. All right? That's the way. That's the way these gosh darn markets work, because people are conditioning to buy stuff. Yes, Amit, there's the way it worked with the harmonics today and that other level I put up there. We're forming a double bottom off of that and confirming but not yet triggering the double, but that double would nearly take it. Remember, the full gap fill. The full gap fill is just beyond that target. The full gap fill is 390.12. This target is 389.66, but would take it to the breakdown zone. Virtually. So that's the upside in the spiders. Even look at your earnings per share until like FedEx comes out and says it's all gone to crap. But everybody's like, oh, FedEx is a one-off. Even though FedEx has been a great normal recession indicator too. I still hear it. Everything's a one-off. Everything's a one-off. Buy the dip. Still today, buy the dip. Buy the dip. So that's about it. I'm going to call it a shortened day. Just want to make sure everybody survived with that back and forth again. This was pretty normal price action for a huge OPEX day. And the Q's double was triggered. Your targets are 290, 290.50 roughly. 291.30, 292.11, and that would also be, let's look at the full gap. The full gap would be right in front of the second target. What's interesting is your breakdown zone is still higher though. Your breakdown zone is closer to about 293. So the next pop I'd be watching on the spiders and all these things I'd be watching for the next rollover play. I'd be watching for on a continued little pop up anywhere between hitting this 390 area, which will, based off where the futures closed, that should pop just guaranteed that Sunday night. I mean, once this reopens, you're going to have that with the futures, unless the futures tank Sunday night. I'd be watching closer if we break through this key resistance. You just watch for the return to the daily rotation zone. That's what I'm going to be watching for on the next pop move. And if you want to do your shorter term analysis, remember, use the most recent swing down. So we take the most recent swing down, right? The top of the rotation zone is right at the 50%, 40-14. I'd be watching for a big rollover play right there. If we did go slightly above it, anywhere between the 50% to the 62.5, if we got above this would be my area for the bigger rollover if we could manage to eke out that 50%. Okay? Based off the shorter term levels. Yeah, I think XPO will be a good gap play. By the way, XPO has an aggressive daily buy and a close above today's high. Okay. And then, so that could be done. Your gap harmonics 47.84. So you could utilize that on an intraday basis, but I'd be definitely watching for this gap play, especially since today's coming in with an aggressive buy. And that would just be for the gap play. Daily cycles getting to the bottom, definitely oversold. So I'd be watching. And if it did get beyond there, your declining daily rotation zones, what I'd be watching for the next rollover. All right. I'm going to keep this short and sweet today. Hope everyone has a fantastic weekend. I will be back for more analysis on Sunday afternoon. Thank you, everyone, for tuning in. Sorry it was a little later today, but I still managed to get a live stream off. A lot of people lose money if the market crashed. I think the stock market is just it's not a pyramid scheme. You can't call it a pyramid scheme because that just doesn't make sense. A lot of people lose their money trading in a lot of crap stocks, and when you get bear market, remember, I want to put something in perspective. Look at this. This move, especially since COVID lows, but look at what the market's done since the Fed's been pumping back in 2009. Look at this. Just keep it in perspective. Okay? This is due to all this Fed keeping interest rates ridiculously low and absurd. Look at the Fed balance sheet. Okay? This was never long-term sustainable. It should correct. Okay? So we have massive overvaluations still. We've had the go-go years with cheap money. We've had a lot of zombie companies, and I hope people know what zombie companies are. If not, look it up. By the way, from a monthly perspective, look where the 50 is. Look where the 50 is on the monthly. It's right at the June lows, which is going to be a magnet right there in itself. But this, you got to work off a lot of this excess, and it's not done overnight. So it's not a pyramid scheme. It's just been fast and loose money for way too long, and valuations have to get back to sensible levels. And that takes some time. Meanwhile, you'll still get rip your face off rallies. I didn't think today was boring. Thought there was I don't know, with this kind of price action, this was not boring. So, all right. Yeah, ES can go easily back down there. No, Not high quality ones. No, so many stocks won't go to zero. You did not have you had some stocks go to zero in the dot-com bust. You had some stocks go to zero in the '08 big pull down with like Lehman went to zero. You didn't have every other, well, they bailed a bunch of stuff out, but you didn't have a bunch of stocks going to zero. You had some stocks that were improperly leveraged. And yes, that will happen again. GM also technically went to zero because of bankruptcy. Yes, unless it rallies on Monday, it is. But it has not been confirmed or triggered yet. So it could go away. With that, now I'm wrapping it up. Everyone have a fantastic weekend. I will see everybody back on Sunday. I hope you all return from the Sunday live stream. Or if you can't make it live, at least watch it on replay. Bye for now.